Share my 45 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. Well, the markets rebounded again after selling off overnight. We continue to stay above 5,900 bases the S&P. Markets seem to be very stable and willing to keep the underlying bid. Let's get into tonight's video. Well, welcome everyone. It is Thursday night, therefore this video is the final video for the week. This is coverage for Friday. So thanks again for coming and watching the show every night. I think we're about into 5 weeks of consistent every day, Sunday through Thursday. So once again, sign up. Just while the room's filling up just a little bit, make sure you get the Substack at kendallreport.substack.com. And it's interesting, I'm actually in the process of running the data sheets for tonight for the S&P, and we continue to get this underlying bid that shows up, and it doesn't seem to want to go away, right? So we printed down yesterday's range basis the S&P was an S2 R2 number, so that is pretty much the normal range. A lot of times we'll have a balance of, the R's and the S's that support resistance numbers that come out of our market grid. And so this is just kind of what we're looking at as normal volatility right now, just this sideways chop. If you remember last night, I was showing you the red dot indicator completely flat. And these markets have been pretty stable. Nothing overnight that I feel like was a reportable trip. Trump's trip to the Middle East has been pretty productive. It is interesting, though, and one of the things that it's one of these more frustrations that I have with dealing with the administration is they talk not in riddles so much, but this is typical of every government. They'll throw out the numbers 3 trillion, 4 trillion, 10 trillion, all of these numbers, but they forget to tell you the distribution of those numbers. That's over 10 years, over 5 years. But regardless of that, as I talked about last night, I actually believe that Trump has in his fingertips right now way more power than the Federal Reserve could wield no matter what they did. They could drop the rates to zero and pump money in, and it's not as powerful as having those capital investments in your hands. And they're non-inflationary, they create jobs, they create income. Rather than throwing money on the fire, they actually create the capital and the infrastructure and everything that has to go along with these investments. So I'm still impressed with all that, how this stuff, like I said, I think all of the things that they put together so far will be used as some sort of, anytime things are looking a little sketchy or we're getting a little negative, we'll throw in, oh yeah, by the way, we're announcing that this deal is starting next week, next month, 3 months, whatever. But they're going to use this as part of the going forward, the rhetoric to basically manipulate or to keep market sentiment somewhat stable no matter what happens. So, I think if we look at, we saw all the claims numbers, everything came in today as expected. Retail sales down a little bit, but the PPI down 0.5 negative. That's pretty amazing. Year over year, pushing right at the Fed's target, even though they tell you that that we're not at the target. I keep telling you, they know these numbers. They knew the numbers last week. And as soon as they're calculated, the phone's ringing or there's an email or an internal transmission that's letting them know exactly what's going on week by week and all of these metrics. So they're collecting data all the time. If they don't know, then they don't know. The Fed and all the agencies are insiders, so they pass the information around. But You know, I think the Fed's stuck where they are. I think the Fed funds futures are kind of agreeing with me that maybe in September or October, sometime in Q3 and 4 is when we see some drops in interest rates on the front end. The back end is holding up. I mean, I think what I basically have decided tonight, there's not a ton to talk about as we close down the week. So maybe I'll try to get through everything fairly quick and not get on any big rants on anything. And then maybe we can go through and do some individual stocks at the end of this report. Just looking at, let me just check something here. I thought yeah, let me do one more thing here. Let me just, let me give a command over here so I can get this sheet running while we're hanging out. There's still a few people filling in the room. Yeah, I thought I had done this. It looks like it didn't run. It may have to be rerun again. Hopefully not. Yeah, I apologize. I thought this was already run. One last keystroke way over in this other monitor, and then we're off and running. Okay, so yeah, so we'll go through the normal progression I go through every night, and we'll end up going through some stocks. We got to look at NVIDIA. It looks like NVIDIA is driving the market again, and all these big tech stocks are back into play. So we'll go ahead and do that. Yeah, for some reason this thing is not running like it's supposed to here. Maybe it is. Okay, all right. Let's go ahead and get in and take a look at the S&P here, and look at some of the. It's interesting because we continue to stay above the 200-day moving average, and in fact we're really just spinning right within the market grid numbers. Let me blow this up so we can see it a little better. You can see the grid is coming in right where we want it to be from the standpoint of it's just staying right in the range. We're kind of bumping up on S2 last couple of days, but just we did get an outside bar yesterday that was reasonably volatile. It looked pretty good. I had a good short trade overnight and then a reversal earlier on catching some of this reverse on the upside. But there was a decent decline. The trade that came out of off the data sheet yesterday was actually pretty good. So if you got the Substack, you could see that. And okay, good, it did run finally. The thing I just want to mention real quick, let me see if I can bring it up here, but there was, let me get you off screen. I released two things last night. I released the quick start guide for the data sheet, and I released the entire manual, which goes into depth on a lot of things here. Let me just, let me bring that up, and the room's still filling up, but it's relevant to what we're talking about here. So yeah, so this is what was released last night. This is the comprehensive user's manual for the data sheet that I'm about to show you. And this goes through everything and every aspect, trade setups, pattern analysis, everything that's within the logic that I built. And it turns out that it's quite in depth. It's 7,000 words, so there's plenty to go through. Goes through price, pressure, momentum, and what is indicated there. If you're Substack, you're only going to get this if you have the Substack account and a free account. This is available to everybody. I also pinned the quick start guide, and I pinned the manual to the homepage on Substack. So I think if you just go to kindlereport.substack, that you'll see what's pinned to that page. I think the 2025 outlook, and then there's a couple other things, but I just pinned these last night to the dashboard. So if you do get the Substack, you're basically getting 4 markets. You're getting the data sheets. Here's what's on here, and it's talking about ways to do some stuff. And at some stage, one day, I would do a review of how you can take the data sheet right out of the Substack and actually expand it even further just by using ChatGPT or using Claude. So I'll do a video just on that. Okay, but all this stuff is out there now, just for the record. Okay, back to the markets. So what we're seeing here is this flag building up, and still there's an upward bias. It looks like we're going to have an upward bias into early next week as it plays out, and the patterns that are likely to come out of this is more sideways, climbing along this 10-day moving average. Is really the whole configuration here is set up. Last night I had, is the market's about to stall? I still think there's a retest coming back to the 200-day moving average. Right now that value is 58.06. No, let me get the right number. That number is 57.91. So I think we come back to 5,800. Market loves staying over 59 right now. We got below it. I think we traded down to, I think, 60 something last night. Yeah, 58.67 S2, 58.61. So we almost went down to S2, reversed off there, and then traded all the way back to R2, which is 59.50. The high was 44. We finished the session at 34. So he basically rebounded right back into that high. It's just, like I said, if you look at, let's just take a look at these closes real quick. Here's a 5,900 even on Tuesday, and then we traded 59.06. Next day, 59.34, which was today, and now we're coming through, and the range that we're expecting. We'll see what the sheets are telling us. It looks like R1 resistance. Let me publish this, and let's just go ahead and take a look at this right now. All right, so this is the data sheet. It's still 85% bullish. We have a strength on the trend at a 7 out of 10. Approaching key R1 resistance. That's where we're at right now. I was just mentioning that. Volatility is low to moderate, so that's come back in. That's what we're seeing in that range. And then PPM3 is lagging PPM2 and 3 strength. So what it's telling us is that underlying 40-day moving average is just kind of still flat. It's not accelerating, which typically will pull it back in. And that's basically, as you know, these sheets have been programmed to think like me and do the analysis. So it's been told everything that it needs to know. But we look here at the PPMs, and you're just seeing these green boxes. The plus T means we're in trend mode, and we're at 0.39, 0.54 in PPM2, and then PPM3 is in neutral, which is, this is lagging, still positive. And then PPM200 is at 0.318, which is a neutral rating as well. But now we look at the range expectations. R1, 85% probability, 59.50. We're trading 38 right now. And on the downside, S1, 59.17, and it gets R2 is 59.67. I believe the high of this pattern has been 59.87. I'll check that number here in just a minute. but the S2 number is at 5,900. So what it's telling us that we're probably going to stay in this narrow range. I don't think we have any material information coming out as far as economic news goes. There's nothing happening there that is going to be significant at all. And then there's some probabilities down below that are telling us, kind of confirming what we already know. Let's take a look at this. It's got a breakout trade. If we get above 50, then it's targeting 67. If that's triggered, you put a stop at 38. R1 rejection 59.50, going short with a target of 59.17, which is really all that is the R1 S1 trade. That's a trade I talk about a lot. And when we get into this kind of volatility, those are the likely things that happen from that standpoint. So just expect to see pretty much normal type action, staying in the range within the grid numbers that we're talking about. And it's kind of boring, and when you start to get bored, you have to watch out. But the upward slope, you can see here on the algos, are all projecting that these moving averages, everything's moving up. And if we look at where they're forecasted to kind of pause, that's going to put us right at next Tuesday or Wednesday. Then I'll bring up the PPMs. You can see they all start to roll off as we get a little bit further as we come into the final 2 weeks. Believe it or not, we're mid-month already in May. Seems like it just started, but we're already mid-May, and you can see here this. When we get it at this scale, it's just a flat line on the red dots, which are projecting out the things. There is something I need to bring up here. Somebody's going to say it to me. I switched over to SMA 3 instead of the 1. So if you're getting some different numbers, I've been testing this for a little bit, and I meant to let you folks with the indicators know. So 3 is, this forecast is using a 3-day SMA for the projection. And it seems to be a little bit more accurate, because what was happening with the 1 is today it was just projecting the same value. So this is giving us a little bit of an expectation as we go to the next value there. So just so you know, I changed some numbers on you folks. Since we're coming into the end of the week, let's take a quick look at the weekly just to see how we played out. I think I talked about this the other day. This has been a moonshot from the lows, right? We only had one hesitant week, actually two, but out of this, in 6 weeks, we've just, we moved from the low of 48.32 all the way to 59.44 was the high. That's the number I was looking for a little bit ago, trying to figure out what the high of the week is. So we're trading right at the highs of the week right now. Will we get a rejection? I don't know. But the interesting pattern that is set up is that we're coming into a little bit of we're still trying to come out of that bubble trade. And I'm going to draw this in because it's been a few days since I've addressed this. And the pattern that I've been looking at was that something I've been talking about for the last several weeks here is we're looking at just trying to get this tool working, at this market grid continuing to contract and get normalized. So all the way when we got this big spike here, it kicked up the volatility, and we're still trying to normalize. I think we got a few more weeks. We're probably going to see this thing come in. We could see markets trade. I've been hoping for a little downside volatility here, because that would give an opportunity to play the buy the dip, because we're still got a very positive tone as we go forward here. All right, let's go to NASDAQ. There's something I addressed in last night's Substack is that the relative volatility is a little bit higher. It always is that way. The beta is a bit higher on the NASDAQ index than it is on the S&P. So we're looking at crossing over on a weekly, this is a weekly chart again, going above the STX level or RTX level, which is 21,386. We had a high of right now 21,529, and we backed off of that. That range was actually created today. If we come back to the daily, we'll see this. Yeah. So today, meaning the Thursday's trade, there's a high right there at 529. Still got this sideways to flat. All the moving averages are moving up. The PPMs are all basically positive. PPM 3 on the NASDAQ has even a bigger slope. So what this just tells us the probabilities of staying over the 200-day moving average is about 90% right now. You can see down at the bottom here, the PPM 200 is this lowest indicator, and it's still climbing all the way into the end of March. So momentum is just growing there. Take a quick look at the weekly. Okay, we were just there. I forgot to address this, but it looks like all the way into the first week of June, we still have positive upslope. Question is, can we render an all-time new high here? It's certainly possible. I still think if we get there, we get a rejection on a new high. I don't think the new high is, you couldn't do what I call a Jim Cramer trade, which is buy high and sell higher. You try that trade on this, if we make a new high, you'll probably get caught in a bit of a pullback. I think if you just look at the numbers, and I've talked about this before, if we go from the lows all the way up there, we're going to have a 30% run. I mean, some of the biggest years that you ever have are 30 or 40%. So literally in 5 weeks, you had this big run up. That was your trade, right? So those of you that bought the dip and bought it down there did a great job. Most days I'm trading in there, so I've managed to capture a lot of this run, but not by buying the low, but by trading on the right side of the market most of the time. And that's really kind of what you want to do from this standpoint. But we're still potentially have some things going on. So I'm assuming as I'm sitting here right now, not remembering that I did not go through the database. So we're going to go, after this, we're going to go back to the database. So a little out of sequence here tonight. And but everything from the S&P and the NASDAQ that's how they look. So let's now go over to the database. And I just want to refresh this page and make sure I've got the update. Yeah. So what we got out of the database, excuse me, about 340 new buys, 164 sells, so a little bit of rotation. We're still at 69%. I was talking about in yesterday that I thought we'd see some attrition and maybe more rotation. I think that's still possible. This is pretty much where the database will top out and go through those configurations that I talked about yesterday, which is basically seeing some new trades coming in. The old trades that started early in the cycle will kind of go into a neutral. New trades come in. The database will maintain probably a 62 plus. 58 would be a low in this current cycle, and we'd stay around 60% bullish, rotate, and then possibly get another positive rotation down the road. There is 11 of the 12 sectors long now. Only one of the sectors is negative, as we look at this sheet right now. And some of them have done pretty well. We're about halfway through the cycle on the sectors right now. Typical 32, 34 days roughly in the holding period, and we're about 17, 16, 17 into most of those. Sorry that I got out of sequence there. Quick glance at the 10-year. Pull back in a range a little bit. This is a weekly chart. We got just up to the upper end of the band here at 454. We look, 454 was RXT. So we went right to the extreme, and it looks like we're going to come back in, which I was talking about. We should come back into like 4.35, 4.3, come back in. You can see we're kind of maintaining. The moving averages are being projected to come down, and a bit of a decline. Ultimately, if this slope stayed in place like it is right now, we end up at 390, 395, 390. And if you recall, the range that I've been expecting is really between the 395 on the extreme on the downside and 440 on the upside, but we printed up to almost 455, 457. So we went above that. Now we're just correcting back into that 440 range. That's markets are going to, interest rates are on the long end is going to stay that way. I noticed that there's some folks talking a little bit about real estate markets are softening quite a bit, and I think that's going to be a continuing process. I don't think the back end of the curve is going to drop much, so that's going to be a continued problem from that standpoint. All right, so let's move on. We should be able to get to some stocks here fairly quick. Let's go to gold. Gold finally bounced a little bit, but we printed down. Look at the daily chart. We printed down yesterday right to the STX level. So STX is 3105. The low was 3112. So we came pretty close to it. We blow it up a little bit. You can see we came right into that V shape here. And the red dots are suggesting we're coming back towards 330, 340 range on the upside. And the algos are still negative though. And this is going to continue to just keep gold in this flat line with a bias to the downside. I think the gold market has printed its high for a while. And, you know, we've got basically this distribution top building now, and we have downward fib targets at the moment to 3,032, 29, 62 on extremes. I don't think we go there right now. The algos are suggesting that we go flat and then move lower in the cycle, maybe sometime mid next week or coming into the end of May. And we're going to be dead into summer and start to get in, as I've been saying for a while. I don't think we make a new high. If we did make a new high on the equity indexes, I think we get a rejection and we come back in the range. I don't think we're in a place where we can start a new cycle to the upside yet. I still think that's not until Q1 of next year, maybe even beyond that. I think we're going to chop around here. It's going to be pretty frustrating if that's what your expectations are. There's going to be a lot of trading in these ranges to be done, but I think you're going to be disappointed if you're expecting to the moon. All right, let's do Bitcoin, and then do me a favor. Pretty quiet night, and about 150 people usually show up but aren't here tonight. But do me a favor, those of you on there, give me some stocks. I'm going to go through a couple things. I'll go through the Mag 7 for the most part, and then just start feeding some stocks in this chat line. It's pretty quiet tonight. It's not moving very much. So if you could do that, that would be great. And hopefully I'll be able to get to some your stocks that you offered. Anyway, so Bitcoin continues total flat line. I've been telling you. I still believe this is a very, in hindsight, we'll look at this as a historic moment. And I'm not going to tell you that I don't think that it's going to collapse, but I do think this is the point in time that we're going to get some serious tests going on. And we've just been flatlined, what, 9 days, 10 days now? Ever since we got this RTX sell signal, you almost draw a line right straight across. Now the algos are suggesting that we're going to see some upside here. So that'll be yet to be seen. The PPM algos are flat to ultimately down as we come into June. So to me, that would be to get so close to rendering a new all-time new high, and then fail and go back under 100 could be a little worrisome. We'll see how it all plays out. All right. I'm going to do, coming up, Bitcoin must go right to MicroStrategy. Looks pretty similar. They're usually similar shapes. It's interesting because this may be leading. This is telling us that we've got a little bit of a rolling top coming in here, potential. Today's range was pretty rough, down 5%. 21-day moving average is probably the next target, which is going to put us at 376. So it's had a nice move off that low. We had some Fibonacci targets up here that got met. So we're basically stalling out at these Fib targets up here. Let's take a quick look at the weekly. All right, so I'm just trying to get this set up here a little bit. So weekly pattern is also trying to stall here. Like I said, to me, this is somewhat concerning. We get this big distribution, we sell off, we come right into a key moving average. There is this red line here I just happened to notice. Let me blow this up so you folks can see this a little bit better. So these dots right through here, that's considered to be a pivot. So we only had one, this is a weekly, only have one close above that. It's 411.60. It looks like everything is going to try to top here. So my concern is, and people are going to, the way the algos are set up, that we're going to come back into this rising 10 period moving average somewhere here around 354. Oh, is that a channel short? Yeah, I can, yeah, I know a lot of folks like channels are looking at, this thing going to zero. It's kind of a Ponzi scheme in a way. I'm not sure. If you listen to Michael Saylor for more than 5 minutes, you probably figured out he's possibly crazy. I'm not sure. I know that's a funny line, but sometimes he's just so full of the strategy. I mean, that's what he's supposed to do. He gets paid to talk his book, right? That's what it's all about. All right, let's move on. Let's go to... I'm just going to go down the list here and just see how far I get. What I want to do here, I'm going to move this over to the other page. I just want to see on some of this stuff if we do it. And by the way, if you get the Substack, it's interesting that this page ended up. This is right here, the dashboard I put in, but this is the active one. There's current positions and there's a dashboard in there. So if you see this, if you click on the live link, you'll get to this page. I put that in every night, and you can see exactly what everything's going on. I thought it was interesting though. Last night, the investment cycle analysis and the elements that came in right over here were quite interesting. And right below that, key market drivers that came up with foreign investment, 600 billion of Saudi funds, more to come. And then there's trade tensions, and it talks about the pause. So these are just key market drivers and news and sentiment. So this is a very active screen from the standpoint of, this is another one of my creations that I've done. This is basically taking this stuff out of this. Bear with me a second. All this is taking the information from this sheet and one other, and then converting it into the this new dashboard. So this is all stuff right out of WaveTech. Okay. Let's go back to the chart I was just looking at, which is Arista Networks. So I just brought it up on WaveTech. It's long on this stock from 76.92 is where WaveTech bought this thing. So that's down in this area here at this breakout. We're bumping up against resistance on the 21-week moving average right now. This is definitely coming in to some resistance. You see the red dots are kind of rolling over right here, right along this 40-week moving average. So there's going to be a lot of resistance right in here. So this would be a good place for you to potentially go in and maybe do some covered call writing, something like that against this stock just to protect it. Looks like the uptrend is probably going to consolidate here a bit, and then off you go. So you can probably collect some money if you do those type of strategies. So let's go ahead and just go to the big elephants in the room, NVIDIA. This is weekly. So this is my issue, folks, and this kind of brings some things into play. We've got some more upside, but a lot of these symbols, and including, even though the NASDAQ and these heavily weighted indices look a certain way, you start breaking down the individual symbols and you'll see there's conflicts and issues with continuing to build on that, because obviously NVIDIA and the big Meg 7 is going to be necessary to push it up, especially since if we look at our database on the intermediate, that we're looking at still, like a less than a 30% holding. So there's that foundation I talked to you about, there's not enough of it. And some of these stocks look pretty good, but we're getting, most likely, you can see right here, we're going to get an RTX sell signal, which means that we're probably going to get 1 to 2 weeks of sideways. We're probably going to flatten out here right around these moving averages. The PPMs are all kind of peaking out. There's a little bit more upside on the ppm1, but ppm2, 3, and the 200 are all kind of peaking out here. So where all of these markets are getting, I think, a little bit tired, even though they're maintaining, they get a dip and they're still to buy the dippers out. You have to realize so many people probably miss that decline on the indexes. The buy the dippers are going to be out there until they run out of money. And when they start to run out of money, then you'll see some backfilling and they'll get discouraged. They get out, then you can get back in again. But the patterns that are setting up here are really pretty obvious. We go across the board. So let's just do this. I know somebody was asking for Tesla. I'll look at let's go through some of these stocks. So Tesla's getting also an RTX. This is a big number here, folks. This red dots, I talk about these all the time. If I zero in, this number is at 393. That'll probably be the ceiling, but if we broke above that, it would tell us we get a swing objective. But if you look at Tesla's history, this was a big move up here, and I still argue throw some fundamental thoughts in here that Tesla will not end up being a car company. It's going to be robotics and AI. Cars are bad business, especially electric cars. There's not any big adoption going on there. I know there's a fair amount of them, but there's definitely not a big adoption. For the most part, people don't want electric cars at the moment. Maybe it'll change. But when you look at Tesla, we're probably going to get into, this is kind of an echo bounce where we're starting to retrace the previous decline. This is going to be most likely the ceiling around 390. And then somewhere in here, we'll start to stall. And you can see that this is what the algos are picking up. They're picking up almost this sine wave type movement where we're just looking at the market start to consolidate. We're probably pretty much close to a peak here, but we're going a range. So once again, if you own the stock, you want to own it, these are good times to right straddles, sell out of the money puts, out of money calls here, take the money, hold the stock, and go from there. That's going to be your best bet. You can build a lot of income doing that with those type of strategies. But just looking at the algos, they're all peaking out, pretty much like the NVIDIA stuff, right? So let's go to Apple. Yeah, just real quick, I want to. Tony's got a question. Can you have the Waytech software engineers add an effectiveness ratio? What we're working on is that data, that sheet I was just showing you a minute ago. There's going to be we're trying to rebuild this thing, and ultimately you'll be able to ask the software that question. And because the new software platform that's being proposed and kind of worked on right now is that you'll be able to prompt information right from there, and it will go in and answer questions. You can. I need to do another class. I know a lot of you folks were in on that live meeting that I did several Fridays ago, and we had some technical issues and stuff. I tried to edit those. Those things aren't editable. It was because of some of the things that happened there. It was really bad, and it's very big, and it was just so clunky. I couldn't even get it. I tried editing some of them. It just didn't work out. So I'm going to have to go to the effort of actually building out some of these things. And I'm kind of waiting till other things are done. But I don't know if you saw the dancing robots the other day. Back to Tesla. That was pretty fascinating. So let's look at Apple here, okay? Let me. So Apple is, while it's had this rebound, look at the relative weakness. If you were to compare this to the Nasdaq or the S&P, even, that you can see we've just rebounded. This is a weekly chart, but this is not a good looking chart. We actually went below the 200-day. We're looking at coming up on some resistance, but if we look at the PPMs, we're looking at the potential maybe coming up into this 21 period moving average, which right now is around 220, 222 or so. So there's still another $10 to the upside, but I think we probably get locked between the 10 and the declining 21 there. That should be where we end up. Algos are suggesting a little bit of upside, but not a lot. We should just stay in this range. But this also goes to my argument, folks, of what I'm talking about here. When you start looking at key components of the S&P and the Nasdaq, S&P and the S&P and the Nasdaq index, you're looking at none of these stocks are in a big position to run. So you're looking at secondary stocks that have got to be able to boost the indices back up. And other than a lot of arbitrage that's going on between the indices and maybe the Mag 7 and some of those, I don't see the structure here for any sustainable rally. It's just always, when I dig into these things and start looking at these individual stocks, I just don't see the numbers. Yeah, I see Tony saying Trump said never appeared desperate. I don't think he ever did. I think it's inverted what you're talking about there. The Chinese were pushing for this meeting, and when they got there, they folded the cards, not Trump. They're pretty desperate. I see it differently. Yeah, let's do that. So this K-Web you've got there, who is it? One second. I'm having a little issue. 1 second. Okay. Sorry about that. Yeah, so Tony's asking real quick, it's a WaveTech question. Does it make sense to pick a portfolio of stocks to follow, or just pick the stocks that come out every day or week or high? If you go the every day or week, you end up with total randomness, and it's just not worth it. You're better off getting a portfolio of stocks to follow and then update that list very incrementally, maybe 3 or 4 times a year. That's all you need to do. Okay. So this K-Web, what is that? Whoever was putting that up there. Yeah, Tony, just real quick to follow up on that, and then we'll kind of do a ad hoc show the next 10 minutes or so. But yeah, so you always want to have like a set of stocks, and I would prefer that you have stocks that you're very familiar with. You know what their kind of volatility range is. They test out. They have good ER ratios. They have all the good stuff coming from the models, and you want to build around those, and you want to make sure they're just players in the economy or in the sector or group that you're focused on. You just want to make sure you have the good performing stocks, and then you let them rotate in and out. It's just like picture yourself as becoming a mutual fund manager. You wouldn't want to be, you wouldn't want to buy a mutual fund that this week they like this stock. They don't have any style. They don't have any commitment to what they're trying to achieve and what they say they know. So you always want to trade what you know, and then try to build off of that and dig into those sectors and those groups from that standpoint. So hopefully that's helpful. Yeah, I'm not sure. This is, I guess, China Internet ETF. Slightly looks like some upside. Yeah, I think with the, just a quick comment on that is the whole China, everybody wants to say Trump folded his cards. He actually didn't. They walked in there with 145, and Bessett came out with a deal. Everybody wanted a deal. No one wanted to keep things where they were. So I know Trump backed off, said, okay, let's go 80%, and you're trying to make a deal. And actually, to be able to make a deal or settlement equals compromise. So everybody has to give something to come to a deal. So it doesn't always have to be a winner or loser. And I know obviously some folks like to point out that, oh, he's a loser because he did that. I don't know. Is it a loser if they did that deal? I don't think so. I think it's a win-win for both parties. So I think it was pretty good. And, Scott Bessett, I have mixed emotions about his style, but, they seem to be getting stuff done. We'll see if it sticks too, right? There's a lot of stuff there. So I did Tesla. So let's look at Reddit. I don't know what I did, but all of a sudden I have a line graph only. Yeah, all my bars and stuff are grayed out. Yeah, I can't even get to bar charts or candles right now. I have no idea what happened there. Anyway, Reddit looks like it's fairly positive. It's got some fib targets on the upside here. It's got 191, 200, and 206 as upside targets. Nice upward slope. Looks like positive move here. This is daily. Yeah, I've never seen this happen before, but it only gives me an option for line with markers. My candles, everything's grayed out all of a sudden. Don't know what happened. Don't know what I clicked on. All right, that's frustrating. K Packet One, you're welcome. Thanks for the nice comment. Appreciate it. All right, folks, I have no idea what happened to my bar chart. I have a line only, which so, and Andrew, I see your comment. You start your WaveTech subscription again. Would you reach out directly to me so I can try to revive your old account so you don't have to just sign up another one if you want it back? So send a email to info@Kindle Report. We'll get that signed up. Yeah, boy. Not to mention, somebody's talking about United Healthcare. They have a lot of issues, including a dead CEO, right? So it's interesting that all of a sudden these things are showing up that there's potential fraud and other things there, huh? That's an interesting scenario. All right. Well, I'm somewhat frustrated. I'm going to come back up. I can't get this. Some of the. I'm going to work on it. Yeah, I've never seen this happen before. Let me do one more thing here. Yeah, it's really strange. For some reason, I can't get to any of my other bar charts or anything. So I guess that's a sign. It's Friday. It's right at, I started a few minutes late, but let's just kind of call it quits here. I would just tell you folks, make sure you get the Substack. I think it's a really good value. You got now that I have the manuals out there, how to use these data sheets. We're working on a project to get the datasheet availability so that you can use them on any chart. We're looking at a couple of different models where you have to use your own API from Chaude, or you can use ours. The problem, it gets very expensive and you get a lot of people clicking on something. So we're trying to figure out a pricing model and how to handle it, because those data sheets rely on having Claude to be able to crunch the numbers and render the artifacts so that you can see what's going on. So I'm working on a couple of those issues right now. It's been probably 3 weeks in now. It's been fairly frustrating, but I think we've got an idea on how we can have a leasing type component and get this thing finally distributed out. I just don't want my hard work and my code flowing around Reddit. I've seen people out there. It's been kind of interesting, not necessarily funny, but there's some posts out on Reddit that people have put out the code for the PPMs and things like that. And I can tell you, I've looked at those posts; they're not the code. Fairly close concept. They're just trying to get something to render. It looks, but it's not exactly the code. I saw one that was a reasonable representation, but still not the code. And especially there's no algos. They haven't figured out the algos. So you can get the actual calculation sort of, kind of. But I just want, I put a lot of work into this stuff, and I want to be able to get the concepts. That's why I put that manual together, put a lot of effort in there. I'm still working on the book. I'm at chapter 7, I think now. So everything's inching forward, okay? Just so you know. So the book to me is the most exciting piece. That's really kind of putting a big wrapper, lot of philosophy and things, and how things came to come about. I was just talking to somebody a couple of days ago, and I look at my entire career and things that happened sometimes way before they should have happened based on what knowledge or experience I had. I got kind of catapulted into places like, hey, who can do that? Somebody goes, Kendall can do it, put him over there. And I ended up just falling into spots that really accelerated my career. So just know that, sometimes you get on a path and it's puts you into a place where you never thought you would be. I can go back to all the stepping stones. I have a document that was floating around that I did that showed all the step-by-step and what happened through the career and how I ended up in this role versus that role, and how I ended up building the software and building the models. And it's just the whole thing was just step by step. And sometimes you just stepped in a pile of mud, but it was a good idea. It got you to jump out of the mud and into somewhere else. So it's pretty interesting when you look back on a multi-decade career and things that happened during the time. The good, the bad, and the ugly, as they say. So anyway, let me just look at, I got to zoom in and see these. Yeah, I appreciate everybody. I have to tell you, and I was telling somebody earlier today, I love this community that's been built. Uh, Not very many people. We're probably about 130 short of what's normally here live today. So it's a Thursday night. Must be something going on. But uh, all you folks, I really appreciate the. For the most part, we get a little troll in here once in a while, but everybody's just very courteous and really paying attention. So it means a big thing to me because, as you know, I was off the internet for about 6 months or so. So I'm back, just kind of continuing to build. I'm still trying to get more of a slant towards some educational stuff. I really want to get the tools out there so that you folks have the ability to use these tools. I absolutely love the data sheet. If I told you I don't know how many hours I have in that, but it's a lot, several hundred hours into that. And, I've been training it in the prompts and engineering prompts to think and look at the PPMs and if a lot of if and then kind of statements that has been put together to make that thing function. And I've got some other stuff I'm working on as well that is even way cooler than that stuff, especially on the portfolio level. So I'm excited about some of the things I've been able to achieve there. So anyway, folks, have a great weekend. Hopefully we'll get some more clarity on what's going forward. I still think it's kind of muddy as we look at things. So just remember, Andre, if you're still around, send me an email and we'll try to get your account back up. I'll have to, I would like you to give back your old account. If you just want to set up a new account, then use a new email address and just set it up and go. You can do that. But if you want your old account back, send me that email and we'll work together to get that back up. Yeah, you do have to love the trolls. I'm just looking at my back hurts. Um, just go. Someone's asking, how do you sign up? Just go to kendallreport.substack.com. Right there. You can do it. Yeah, I appreciate I did cover gold earlier. Yeah, I appreciate the comments of Substack. I I enjoy doing the Substack. I have been writing written commentary since 1984 was my first newsletter, and I've worked in several research departments writing shit up. Excuse my French, but I've done a lot of stuff over the years, and it's actually very enjoyable. It's to do an everyday YouTube and everyday Substack. It's kind of interesting. It really keeps me involved with the world and what's going on. So it's a good thing for this old guy to be maintaining things, keeps the mind sharp and all that kind of stuff. So I appreciate everything, folks. Have a great weekend. Appreciate all the nice comments and the great people that show up on this channel. I really can't tell you how much I was saying earlier, how much I love this channel and how the people are that have been around me. I've met some incredible people off of here. Just haven't met you yet. I love meeting people all the time. So I'm still kind of kicking around a product, something we talked about back in the pandemic days of doing some kind of like live meet and greet, maybe get a couple of buddies together and do a weekend presentation or something. Maybe I should hook up with the Nigerian brothers. We have a lot of common friends. Anyway, have a great weekend. We'll talk to you on Sunday night. See you then.